everybody, Rob Booker here. Welcome all of you. This video is sponsored by IGUS. IGUS is a leading Forex broker. There are 0 economic indicators that matter. When you look at the economic calendar, there's only one thing that matters, and that's jobless claims, and they're so gigantic that now more people have filed for unemployment and lost their jobs than all of the jobs created since the financial crisis of 2008. All of them are gone. All of those job gains have been erased, and that's the only thing that matters. I don't want to put a giant negative spin on everything going on right now, but that can't be avoided, and you have to consider that the long-term effects of that are going to be substantial. And even if people start going back to work, we're not going to get 22 million people back to work in the next 3 weeks, 4 weeks, 5 weeks, or even 12 weeks, or even 16 weeks. So what does that mean for us as traders, and what currencies are going to reflect these movements? So once again, welcome everybody. I'm glad you're here. Thanks for watching the channel. Thanks for being here. This is our weekly update where we take a look at the currency markets, and it's, of course, the first love of mine. It's where I made all of my money initially trading. And all economic events eventually filter down through into the currency markets, because there's economic events like, jobs numbers, and those lead to actions by central banks. And those actions by the central banks lead to exchange rate changes. And those exchange rate changes then lead to actual movement in other markets. But everything kind of revolves around and starts with FX rates and exchange rates. And one of the ones I'm paying the most attention to is the British pound Japanese yen. I like to call this the Orient Express, after that train that used to run through Asia, because once this really gets moving, it doesn't stop for anything. And if this breaks down below 134 and stays below 134, I think there's this weird shoulders, like a hump and shoulders pattern, like a really oddly formed right shoulder here. If it breaks down and stays below 134, I think you're looking at movement that could go into the 124 area, like 1,000 pips of movement. The market sort of recovered, right? The stock markets of the world sort of recovered over the last couple of weeks. And the big question on a lot of people's minds is, should we believe that? And as I said, I think the answer to that kind of a question is really something that you use the currency market to answer, because the Japanese yen is sort of the canary in the coal mine. It's the one that shows you if the Japanese yen is rising. So if the Japanese yen is going up, that means that you're going to hear words like risk off, or correction, or bear market. And we've been down this road before and talked about this before and had this conversation before. Tons of low interest loans were taken out in Japan, denominated in Japanese yen, and used to buy stocks and real estate all across the world. And all of those loans are coming due. All of those loans are coming due now, because the assets that were bought with that yen are being devalued. And so there are margin calls, right? You borrow against an asset. If the asset loses value, the loan gets called. And those loans are getting called all around the world. And right now, there's been a temporary reprieve. The Japanese yen has been weakening, and things like the Australian dollar or the British pound have been rising. But now the question is, can the Japanese yen strengthen again? And if it starts to strengthen, it will usually start to happen before the stock markets of the world begin to correct. So look for the Australian dollar Japanese yen to get down to something like 66.50. And if we get to that number, we will have broken the trend line, the upward trend line that has came starting sort of March 23rd. And we will have gone, 1 week, 2 weeks, 3 weeks, 3.5 weeks or so of bullish movement. If that breaks, if 66.50 breaks, then once again, I think this is a potential 500, 600 pip move, like a really, really substantial, gigantic move. And the yen is the one to watch. Now, how do you know if everything that I just said isn't happening? Well, you look for brand new highs. You look for the the yen against other pairs to weaken. You look for things like the Australian dollar, Japanese yen to break above and stay above 69. And if it breaks above that structure, that simple level of resistance is an indication that it's risk on, that the stimulus packages across the world are working. I think they said that the Bank of Japan is going to give 100,000 yen to every Japanese citizen. And I don't know, they're going to go out there and buy stocks with that money, or I don't know if they are. But once again, this kind of economic policy is the kind of policy that happens in an environment where the stock markets of the world are falling and central banks of the world are worried about the D word, right? They're worried about a depression. And if they're worried about a depression, then the Japanese yen is going to strengthen. The Japanese could lower interest rates 100 basis points below zero, which no one even knows exactly what would happen in a situation like that. And everything that I just said could still happen. We could still see the yen strengthen. We could still see all those loans being paid back. Remember, whether or not a currency rises or not is really about the demand for that currency. And when you got to pay loans back in yen, you got to buy yen, and that makes the yen go up, even in the midst of an economic crisis where Japan is getting hit really hard. So if you want to know how the markets of the world are going to go, look at the Japanese yen. One last note on that. If you want to know where oil is headed, look at the Japanese yen. The Canadian dollar, Japanese yen is down, not because the yen is strong, it's because the Canadian dollar is weak. And in the midst of everything that I just said, the one financial instrument that could break this cycle and do exactly the opposite of all the others is the Canadian dollar, Japanese yen. If oil recovers, if oil starts to climb back above $30 a barrel and so forth, then you're going to see the Canadian dollar, Japanese yen rise and stay above 79, and that puts 80 and 81 and 82 into play. If oil starts to drop again at the same time the markets of the world are crashing, you're going to see the Canadian dollar, Japanese yen move below 74. And then, friends, if oil goes below $20 a barrel, the Canadian dollar, Japanese yen, which is a great proxy for oil, is going to fall to like 60 yen per Canadian dollar. So it could be tragic for this currency pair. This could be the biggest loser of the year if oil doesn't recover soon. So stay safe, my friends. Wishing you all the best to you and your family. Hope you're safe and healthy and doing okay. I'm glad to be here with you looking at the currency market. And thanks again to our sponsor, IGUS. IGUS is a leading Forex dealer, and you can find a link to them below. Check them out. Open an account today. Thank you so much to them, and we'll see you next time.